Welcome to Trading Lounge and the Asian Report. We'll be covering the ASX and the Nifty, and I'd like to start on the hourly chart first and then work out from there. We don't have any open trades here at the moment, but we're looking to do that if we get triggered here. So in a nutshell here, this low here, we can move this up into this particular space here now for any short trades. And any long trades, we'd want support on 6,200 here. There's a couple of little things we need to understand here, and one of them is that this move down through here as an A wave, B wave and C wave here, that's fine, and the market can work higher because that move down through here is corrective. Okay, so we're talking about corrective patterns. So from this point here now, we could be building up here in terms of wave 1 and 2 here, and then wave 1 and 2 in a smaller degree, and then going up for a very strong third wave here. So that's possible. It's also possible too that this particular correction down here is just the first leg, and then we get, if I can borrow these here, an A and a B and a C wave here, and the top of that box here is the 61.8%. So it's possible that we can have this as a wave B here and then come down for a wave C here. So going long here could be a bit of a trap here. So we need a little bit of a strategy for that. So in relation to the trading levels, we know that 6.2, well, 6.1, 6.2 and 6.3, they're minor trading levels. And if we get support on top of on top of number 3 here, which is the top of group 1, well, then we can start looking at 6,500. That's one thing. So that's the top of group 1 here. So it's the same in here as well. These are subgroup ones here. So we've got 1, 2 and 3 here, that 30 there. So that's the top of a group 1 as well. If we get support on that, well, then we'll get to the 50, the next level, number 5. So getting support on 30 here would take us to here, and that means that we're way above the 61.8%. So that means that we'll end up going higher here, and we'll be going a lot higher from that point. So yeah, to me, it's really all about this number here, the 6,230, and finding support on top of that or not. Now, the situation further here is that if we look at this move up through here, we're looking at 5 waves, so 1 and 2 and 3 here, and 4 across here, and then 5 up through to here. That can take us to, I've just got it to the 61.8%, but it could take us a little bit higher to the 30 there. So this little move up here so far, we can count this as wave 1 and back for 2 here. We don't need that anymore. So we can count that as 1 here and 2 here, and then this is the third wave up through here, which is 1 and 2 and 3 and 4 and 5 here coming to the top here. Then there'll be a bit of a struggle here around the open and all the rest of it, you know, jostling and so on, and then a push up through here. But once we get these 5 waves here, then we'll get an ABC correction. So we can look at this in terms of, let's just have a look at the pullback here. So from here to there to there, we'll just take it to the 61.8%. No, I'll just take it to the 220 actually, and you can adjust that accordingly from that point. So, and then we've got this back here. So I can move this down here a little bit, that down to that point. Well, in fact, if we let's just do that a little bit nicer. So this would be some type of correction that would come to this point here. It's possible for it to drop further here, so that's another point, and this up to here. So this particular long trade here that we're going to take here, then, you know, to be a little bit safe about this and still have the same sort of entry here, is I think we should just move it over to this high here. We can have it at that high and this high here. And also, whatever happens, if this market moves up and finds support on top of group 1 here, for instance, here, then we need to look at being long there as well. So if we look at, let's just move these out of the way here. So to get support on top of 30 here, we would see the arrival, the reaction back to 20. It can drop to 1.5 here, then to the upside, then a corrective move here, and then up from there, the classic trading levels pattern. So that's what you need to get support on top of 3. Look, I mean, you see here as well, so it just totally failed here. So that's the reason that you wait here. And even getting support on 6.2 is important as well. So anyway, that's the strategy, okay? And we can go short down here because we know it's collapsed at that point. But even if it collapses, how far can we go down? That's one of the questions that we need to look at. So from this high here, roughly down to this low here, we can look at something in terms of equality as a starting point. So that can take us back to this area through here, okay, as an A wave and a B wave and a C wave. This here is corrective. If we also confirm that on the cash market as well, with the cash market, this is a 5-minute chart. So from the top here, we've got 5 waves down here and a correction here, and then we've got another 5 waves down here. So it could be in this case that we have wave 1 here and back for wave 2 here, then wave 1 down and back for wave 2 here to this point here. So we need to see the cash, technically we need to see this top taken out here. That would make it, that would confirm that it's corrective at that point, okay? Otherwise this can be wave 1 and 2, and then wave 1 and 2 here, like going down for more of a bear market, and that's why we need to have that under here. So this 6,200, as I've mentioned before, we can, in geometry terms, we can look at it as 61.8% as well. So, and that does show up. So when we're talking about, this is the quarterly chart here, just on the Trading Levels charting program, we can see the 6.2 here is significant. We've got a close here, an open here, a close here, an open here. So we haven't really closed above it just yet on this particular chart here. So it is important at this stage here. So we just need to be a little bit mindful of that. Just want to have a look at, and also, okay, the monthlies, this is the monthly chart here. So we've got a close that's coming down below, coming back into this space as well. So we've still got a fair bit to go in this month. Also, too, there's the March equinox, is it, on the 21st? So all the GAN people will be looking for a turning point here as well. On the weekly chart here, this is kind of interesting in a little way, because really this is the first, if we were using the robo method here on the weekly chart, then this is really the first new low that's actually come into place here. So if you're long here using the weekly robo, you would be out here and possibly even short, but we're not going to go short because we know that this move down is corrective, but we are seeing weakness in this area through here. Okay, so just coming back to this point, so that's our strategy really. So we can go short. I mean, the breaking of that 61.8% retracement level is it. So we can go short under the 72 here, under group 2 here, because group 2 is the support here. So in the bigger picture here, what count do we have? And I've got a few counts, but we'll have a look at them. So coming into the 4-hour chart first. So there is this one here where I've had the top in play here. So we know that's not the case anymore, because we know that this here is corrective here. Okay, so we are looking at a corrective move in here. It's just which one are we looking at? So this one here, as I just mentioned before, can be an A wave to here, a B wave into here, and a C wave down into this little spot here. I don't think that would be the one in the two at this. I don't think that would be the one in the two at this stage here. So I'm just going to go out to have a look at some other counts that we've got here. So we've got this count here that will also take us back to this space here. It's, I don't think I've showed this count before, but it's okay, where we have wave 1 and 2 here, and then wave 1 here and wave 2 here, and then a strong third wave in here. It does look a little bit small here, but it's actually longer than it's actually longer than the fifth wave here, even though the fifth wave is more drawn out here. This little move from here to here, you can measure it in your own way, but so it's actually longer. It doesn't look like it, but it's actually longer, and it is quite strong here. So it is acting like a third wave here. So this is a real possibility. So then that would make from wave 2 here, bring this down to the 38.2% retracement level down to 6,000. So that's a real possibility at this stage for this. It would also need to make this one here, because the 6,800 is an old high, like way back over here. So we would need to see that move up strongly for in quite a long move up from there, and that's quite possible as well. If we take the top of this here and bring this back down here, that brings us up to the 2618 area up through here. The other count, which are kind of like a bit better, and this is the one that we've been working with as an alternative count, has wave 1 and 2 here. It's pretty much the same thing really, so just counted slightly differently. Yeah, and having the B wave within this space here. Yeah, so I don't, in terms of actually just trading, it doesn't really matter too much at this stage, because now we know that this move down here is corrective. Our question is that, do we just go straight up from here, or do we just go up to finish this B wave and then come down for the C wave here? And this is probably in line with the banks as well, because CVA is a little bit displaying weakness that can take us lower. So that's in that space there. So I'll leave it at that, and we'll have a look at the Nifty here. So with the Nifty, I've always sort of maintained a bullish count here with wave 3 here, an A wave here, a B wave here, and a C wave here as an expanded flat correction. But it's always bothered me that this has never really been a very nice impulse wave here. But it does count as, I can count it as an impulse wave. And also know too from Richard Wyckoff's work here as well, that a move going sideways across here, well, in Elliott terms, I know that it's corrective because of its overlapping wave structures, but in Richard Wyckoff's work, he would take the distance of this from here to here, the distance of this here, and then stand it on its head from this point here and come up to here. So we can still have a corrective move from here. I mean, I was going to turn bullish from here, and we were turning bullish from here. We were trading long from here, and we're still long here. We've taken part profit here, and we should be getting out now at 11,500, the medium level here. So I want to talk about this little trend here a little bit more in this guide. So basically, from the hourly chart here, where we pop our trades on, we're looking at going long here, taking part profit on the top of group 1 here. We got support on group 1, and from group 1 we could start moving to the upside. So you should be exiting now at the 11,300. So I'll just to make that sort of clear here, we're taking profit here at this, so I'll just put TP here or exit. I'll leave that there for a session or two. and then I'll clean it up. So we're out of that trade now. Okay. The thing here though is that I had it counted as 1 here, ABC for 2 here, 3 here, 4 here, and 5 here. I don't think that's the count. I think this alternative count that I've had here, well, I'll put wave 3 here, wave 4 here, and wave 5 here. I think that's the case here for this. So what I'm going to do now is going to move these out of the way here, and we're just going to rearrange this a little bit here. So taking the 11,500 as the top there, we'll come down to the 38.2% retracement level, and we'll put that here. So what we're looking for here, that may make another little high here, but we're looking for a corrective move before having wave 5 come into play, and that's going to be good for us, because this will also be, yeah, we don't need those. It may not pull all this way down because the wave 4 of 1 lesser degree is a little bit higher there. So coming down and touching on 11,300 is probably what we're looking at here. But yeah, look, what I wanted to say here is this. I mean, this is the beginning of another long trade setup if it plays out, because we'll have the arrival, the reaction, the first high above the level, and then we'll have our correction here, a larger correction here. So we're either going to turn bearish from here, or we basically have the next trend up from here, and then that enables us to go long here. We can go long within this space as well. But the thing is that, yes, we can trade this little bit up through here. I mean, I've got this here at, there's another really important level in here, which is 11,650. Doesn't really seem much at this stage, but that's what we'll use as our high point here. Leave that there. So we can find ways to go in, but what we need to do is we actually need to work out, because of the bigger picture here, this can actually be the, this can be the top of the trend to the upside. So we need, once we get there, we're just going to have a little bit of patience. We'll also look for the short trades as well, but we'll need setups for those. In fact, if we can clearly count 5 waves here, 1, 2, 3, 4, and 5 here, then there's probably the safest thing to do is just sell on the top here, right on the turn, because that way we've got a good ratio, and we'll also clear as well, because it will come back and test this here anyway after the 5 waves. So having that here, then all we need to do is keep the stop above the 61.8% mark here of whatever length that is, and then we'll be okay from that point, and then we can look to add to the downside on that. But otherwise we'll need some sort of structure over here to play with, to understand if we can go long again from that point. So yeah, our next trade will be coming up into this space here and possibly on the turn here, but just to point out that we need to go through that classic trading levels pattern, which is the arrival, the reaction in 3 waves, 5 waves to the upside here to finish that off, and it'll exhaust itself, it'll come down, it'll bounce off that, bounce back up somewhat, and then move down through here. So we could also get it here as well, but we still won't know if we've got 5 waves at that point. So it's all pretty high risk in this instance until we get back up here. If we get back up here, then we know that we're good to the long side. That's our safe long trade over here. So with the trading levels, the general thing is if we just trade to the level, we get out, and we just simply wait until we get another setup over here. That gives us perfect timing, and it saves us also losing money within all of this space here. So let's see this, how this unfolds here. And yeah, I mean, there's not much that can actually happen really when you think about it, because either this market here is just going to go straight through here and never come back, otherwise it can touch here and drop from here, or otherwise we'll get this particular pattern here, or we'll get a variation of this pattern. And the variation for this pattern while we're here of the classic trading levels pattern is the arrival, the reaction, and then we get the first 5 waves up, and then we actually get an A and a B and a C sitting on here, and then we move up from here. But because we've got our long trade sitting above these here, we don't miss it. It's just that this one drops below here, and this one. There is a third one, which is called the overshoot pattern. So the overshoot pattern is where the market doesn't stop here and have a reaction here, just goes straight through it. And in that case, the distance that goes up here is normally the distance that comes back down here again. And when that occurs, we know that this line here becomes the balance point here, and it will just work its way into here. I mean, I'm just exaggerating with the triangle pattern, but that's basically what happens. And then so this is the overshoot, the classic trading levels pattern. This is the most common. This is a variation on the classic trading levels pattern, and this is the overshoot pattern here. So okay, I'll just leave it at that. So that's our job really, is just really to monitor this now. It's not worth getting caught up in trading a little bit higher here or getting in all of this. You're better off spending your time doing other things. Alrighty, thanks for tuning in. Cheers.